50 million Americans went without power in the summer of 2003 for just a single day. The results were stunning. 3,000 fire calls were reported, many from people using candles. As a result, several people died in Michigan, New York, and Canada. The New York City Fire Department alone answered over 7,500 calls. More than 80,000 people called for help in just over a 24-hour period in northeastern America. Blackouts could be coming very soon to North America. Learn more at futuremoneytrends.com/92. Greetings and thank you for joining us at futuremoneytrends.com. I'm here with a very special guest, a friend of the show, John Rubino. He is the author and editor of dollarcollapse.com. You can get great videos, great source of content, very educated audience. And if you look at the articles and what John points out, and especially his own writings, which you can actually subscribe to, his email is free at dollarcollapse.com. I think every week it'll be a treat. It'll be something you look forward to. It's not. I know some of these publishers come out with a small book on their daily alerts or weekly emails. John just gives you just enough, and then you've got all the links there on Dollar Collapse if you want to keep looking into current events, what's going on. John is somebody who I've talked to for years, looked up to him both from a libertarian standpoint as well as somebody who sees what's going on but isn't hitting the panic button. He's very well thought out. One of the first guys I talked to right off the bat. He makes no apologies about believing the dollar could go into crisis, but also he was one of the very few people back in, I want to say 4 or 5 years ago, who told me that we could actually see a deflationary shock prior to seeing a currency crisis. So I'm very happy to have him with us on the show. John, thanks for joining us.
Thanks, Dan. Good intro.
Appreciate it, sir. Well, hey, let's talk about 2016 before we get into the economy and gold and everything that's just going on with the negative interest rates. There's so much to discuss. The last time we had you on the show, we talked about Donald Trump, and I think you would basically refer to it as buffoonery. And I just want to kind of get your thoughts on watching this, especially. I think you're, you've traveled all across this country throughout the years in business, and you study the markets more than anybody I know. I think Trump and Sanders is almost just really a derivative of what's going on with the economy. What do you think?
Well, yeah, that's the important thing to understand. Politics looks incomprehensible right now if you're just looking at political history and what's going on in the markets right now. But it's actually a reflection of the economy breaking down. We've borrowed way too much money in the developed world over the last 30 years, and debt makes everything harder. So it makes it impossible for the incumbent political system to keep on delivering all the free stuff and other things that people want in order to vote for them. And so you're seeing this all over the developed world now. People are losing faith in the existing systems, and they're willing to look at outsiders now. In France, Marine Le Pen of the far-right National Front Party, which used to be kind of neo-fascist. They cleaned up their act a little bit, but they're still way to the right on the French political system. She gets more votes than any other single candidate. And the sitting socialist president in France isn't even going to be a factor in the coming election. In Britain, the referendum to leave the European Union is being spearheaded by Nigel Farage of the UK Independence Party, another far-right party, who now gets a lot of votes. And it goes on and on around the world, where the old system no longer has the respect of the electorate because they can't deliver anymore because they borrowed too much money in the past. So what's happening in the U.S. fits perfectly into this pattern. So you've got an outsider like Donald Trump, who might have gotten 5% of the vote in previous presidential elections. He has the Republican nomination wrapped up now. It's a done deal for him to be the Republicans' candidate. And on the Democrat side, Bernie Sanders has given Hillary Clinton a run for her money. And, she is the quintessential establishment candidate. And he's an avowed socialist. And he's still winning primaries, and he's still accumulating delegates. And what's going to happen in their convention is he's going to go in there and he's going to have his name submitted. And they're going to have an actual vote within the primary, or within the convention. It's not going to be a coronation. And the superdelegates, which are basically insider delegates who they were always going to vote for Hillary Clinton, they're going to be contested. And that part of the game that the establishment plays is going to be exposed for everyone to see. So the Democrat process isn't over yet. The Republican process is a done deal, and they've picked the most outside of outsiders. And the reason that we should expect this is because that's exactly what happens when systems get over indebted. So the financial world is spinning out of control, and it's bleeding over into politics, which in turn will feed back into economics. Because if Hillary Clinton gets elected, she's going to do the same old stuff that the government has done for the past 30 years, which is to borrow huge amounts of money to placate a lot of different constituencies, and will spin out of control. If Trump gets elected, then who knows what he'll do, but it'll probably be a lot of off-the-wall stuff, which he's talking about now, of buying back our debt at a discount and things that don't make a whole lot of sense from a mainstream economic standpoint. So things will probably spin out of control. And if Bernie Sanders were to get elected, then things would really spin out of control. So we basically spin out of control no matter what happens. And the voting process, future elections are going to be even crazier than current elections, because we have only begun the process of spinning out of control. And what we're seeing now is just a hint at the craziness that's going to come when we have a financial crisis during an election year. And that day is coming. And when it does, who knows? People that we never thought would generate a lot of votes will start generating serious votes and a lot of support.
It'll be interesting, John, at the Democrat convention, because I don't know if you saw today's polls out of some battleground states, but Trump is either dead heat or even leading in Ohio. And I would imagine, considering he had just, hundreds of millions of dollars in negative ads, and Clinton really hasn't had that, I imagine by the Democrat convention, Trump will be probably beating her. This is my opinion, but just because she's the establishment personified in a non-establishment year, I would imagine that would up Bernie Sanders' chances for a convention win, just because she will clearly be losing, and everyone will know she's beatable by the convention.
Well, yeah, she's easy to run against this time around, because if for no other reason, she gets the biggest chunk of her money from Wall Street, and that alone should cost you an election these days, right? And so it's going to be really easy for anti-Hillary ads to be put together very professionally and to really hit home, because almost all you have to do is say, well, this candidate gets most of her money from Wall Street, and her opponent gets zero from Wall Street. Who do you want in charge? That's almost all you have to do to win that kind of an election these days. And Trump will put together a lot of very slick ads like that. Now, at the same time, the Democrats are going to put together a lot of ads just repeating Trump's words back at him. And that's going to be pretty effective too, so who knows, But yeah, there's a very good chance that we skew towards outsiders in the coming election, and that plays into Trump's hands and it plays against Hillary Clinton. So yeah, this isn't a done deal. See, the final part of the mainstream narrative is that, well, if they do, the Republicans do something crazy like nominate Trump, then Clinton will just crush him, and we'll be basically exactly where we would have been if we'd had the Bush versus Trump or Bush versus Clinton coronation that everybody expected that we would have had. And so that part of the narrative also might not turn out to be true. And so we've got some interesting times ahead of us. But again, it's finance is at the basis of all this. And so in that sense, politics doesn't matter, because we've already screwed up the system. We've already borrowed more money than we can ever hope to pay back, which means we get financial chaos no matter what, no matter who's in charge, and whether it's a part of the deep state like Hillary Clinton or somebody who's at least on the surface opposed to the deep state like Donald Trump. It doesn't matter. We have a period of financial chaos ahead of us globally, not just in the U.S., but in Europe and Japan and China. We're all liable to spin out of control at the same time. And so politics is going to reflect that, but it's not going to be able to stop it from happening.
Do you think it's accelerating the unfolding of the financial crisis, basically the second leg of, I don't know if you want to call it the depression or the unresolved panic we had in '08, the crisis that really didn't get resolved? I mean, is it starting to unravel? Is that what we're seeing with gold and silver recently, or is this just a cyclical rise for gold and silver, or is this something bigger?
No, it's probably the system re-leveraging to the point where we spin out of control again. Because look at what happened after 2008, 2009. Most of the major countries of the world borrowed unprecedented amounts of money, but China actually went much further than anybody else. They quintupled their debt in the space of 5 or 6 years, and they used the proceeds to buy commodities and industrial materials of basically every kind, and that pushed the commodity prices up across the board, which gave us the illusion of a recovery. And then when China had to stop their debt binge last year, their stock market tanked and the economy started to slip back into a recession, which could easily become a depression. And then China responded to that in the same way as before. They borrowed $1 trillion in the first quarter of 2016 and bought a bunch of commodities with that money, which gave us a little mini recovery here. But now China is starting to hit that wall. The mainstream media is actually picking up on the fact that China is grossly over-leveraged and headed for a crisis, which is something you don't normally see before the crisis hits. Usually the mainstream media focuses on the headline numbers that are generated when you borrow lots of money and spend it. Usually you can generate good numbers in the short run with borrowed money, and then the pain comes later, and the media usually focuses on those headline numbers because they don't analyze where those numbers are coming from. Well, this time around, the mainstream media is focused on the pain to come for China, which is really historically unusual. And even the Chinese media, the state-controlled Chinese media, is coming out and saying, yeah, we borrowed too much money, and now we need to deleverage. And we need to let the market forces play out here, which is to say a lot of their zombie companies are going to have to go out of business. And a lot of people are going to have to be laid off, and they're going to risk civil unrest and a global recession in order to be able to stop the borrowing binge, because they understand that if they keep it up, then they've got a 1930s style depression on their hands, or Weimar Germany hyperinflation, one or the other, and which they do anyhow. But they're starting to recognize that they do, and maybe take some steps to try to head it off. And this is unusual and interesting, and so it means China might be the epicenter of the coming crisis.
John, seeing guys like Stanley Druckenmiller, largest position of gold in his portfolio that he's ever had. Carl Icahn is now more short than he's ever been in his portfolio. Ray Dalio, very bearish. He's been talking about buying more gold lately, physical gold. Does it seem these guys who've even, I believe these guys even beat like Warren Buffett's returns over the past 30 years. These are smart people. These are people in the know. Does seeing these guys make these, seriously, dramatic moves into either gold or shorting the market, does this lead you to believe that the inevitable crisis that's unfolding is now possibly imminent, like it's happening this year or 2017 at the latest?
Well, it gives credence to that thesis, because it's been easy for the last 20 years to say, well, we've got this gigantic financial crisis coming that's going to lead to mass devaluation, so buy gold and sell stocks. And that's been true for brief periods, and then dramatically not true for other periods in that time. But now you've got these serious heavy hitters, like you said, getting on board with that thesis. They're starting to put their money where their mouth is when they sell stocks and buy gold, because basically that's what you do when a financial crisis is approaching that will lead to short-term pain followed by some kind of mass devaluation, as governments lower the value of their currencies in order to head off a bigger crisis. And so, yeah, you want to short stocks and buy gold in that kind of a circumstance. And to see these guys do it means that it's not just a thesis without a time frame anymore. Now it's imminent, if they're right. And they're saying that it is imminent. Because you don't do something like this if you think it might be 8 years away. You take a big position like shorting the S&P 500 if you think it's going to happen this year. And the same thing with loading up on gold. Gold doesn't pay you anything. It's a non-cash producing asset if you're just buying bullion. And so to do that means that you expect a positive price return on it in the fairly short run. And that's what these guys are saying. So yeah, it's encouraging from a gold bug's perspective to see these non-perma bears, non-gold bugs jumping on board that wagon.
Let's close out with the fun that I think a lot of gold bugs have been having lately, and that's in the junior resource sector, even the large cap mining shares actually. Gold's had a nice move here in 2016. It's up about probably 15 to 20%. Silver about the same. But the mining shares, I mean, many of them have doubled. Some of them are up, even as high as 300%. Mainly I'm following the good names. I mean, I don't follow the sector as a whole. But it does seem to be a major turnaround here, right?
Oh yeah, these little miners just rocketed in the space of the last 3 or 4 months. I've actually got some now that are up from where I bought them, and it took a serious move to get them there. But if this is the beginning of a longer trend in gold and silver, then these little miners have just begun their move. They're 10 baggers, a lot of them. So the fact that they've doubled so far this year means that they're still going up 5 times from here. And some of them are going to go up quite a bit more. So I'm in no way advising anybody to jump with both feet into the junior mining sector right away here. But I think that if the gold and silver bull market thesis is correct, and that we're heading higher from here, possibly a lot higher, then these little miners are going to be the .coms of the coming precious metals bull market. They will just go crazy. And so I think that now it's not a bad time to be feathering into the junior mining sector. We could have a correction in gold and silver here based on the Commitment of Traders report and the fact that there's been a pretty good run already in the last few months. And that would offer some interesting entry points for a lot of these stocks. Again, don't bet the farm on anything as dicey as junior miners, but definitely own some, because one 10-bagger makes up for a lot of other bad decisions in a portfolio, and a couple of 10-baggers can be, retirement level money for a lot of people. So sure. I think this is our chance to acquire some assets that are going to have huge runs in the not too distant future. And if we do it wisely, we'll be really glad we did.
Yeah, certainly if this is the beginning, which I personally believe it is, we're barely at the national anthem. I mean, this is the warm-up party. So, John, thank you so much for your time again, everybody. dollarcollapse.com. You can subscribe free. There's plenty of content, daily content. Really, it's called dollarcollapse.com, but there's some of the best economists, whether there's deflation, stagflation, inflation, Keynesian, Austrians. I mean, it's all there, but it's from, I would say, like the deeper thinkers. So I'd highly recommend everybody go to dollarcollapse.com and make sure you subscribe to John's email as well. John, thank you so much for being on the show with us.
Thanks, Dan.